Black Earth offers a full suite of humic solutions, from high-purity granules to powder, liquid, and soluble formulations, all powered by pure humulite. Trusted by growers worldwide from one of the world's rarest humulite reserves. Grow stronger with the power of Black Earth humulite. Learn more from Mind to Market by visiting blackearth.com.
This is The Truth About Ag, episode number 34, an interview with Trent Klarenbach. We apologize at the 38-minute mark. The sound quality does get cut out. Welcome to Western Canadian rural internet service providers, but we do think the interview is strong, so we still wanted to put it out. Hopefully you make it through the entire track. There's a lot of good content. Thanks for watching. Welcome to The Truth About Ag. Welcome to the Truth About Ag podcast, distributed under the RealAgriculture Media Network and powered by the Hebrew Group of Companies. Remember to like, share, subscribe wherever you get your podcasts. And a quick shout out to Farmer Coach, only primary producer entrepreneurial coaching program that allows farmers to dictate their own definition of success. Come join us in November. Limited seats are still available. You decide, one day or day one. All right. I'm excited for this one. I'm not going to lie, Trent. I told you before we got on here, you affected my world for at least a couple of weeks with a lot of my clients and a lot of non-clients as well. I probably got texted and sent your blog with your podcast with Tim Hammond on the land in Saskatchewan, probably 30 plus times. So I'd like to say this is a hot topic, but I think partially it's just an emotional topic when it comes to producers. So let's start with a little background. So I know you, obviously. Christian knows you, and a lot of people know you. But give me your background, Trent, of, I guess, where you grew up and the education background for what you do today.
Okay, so I grew up in a small town farming community called Etonia, Saskatchewan, about halfway between Leader and Kindersley, west side of the border, half an hour inside the Alberta border. From there, I went to university. I studied agricultural economics. I had no intentions in going back to the farm. This was in the early 90s. Well, I started school in 89 university. So there was no encouragement to farm at that point in time, right? So I went to university. My roommates were, it was farm talk the entire time, right? And I got the bug, and I came home and I said I wanted to farm, and that, my parents helped make that happen. But I was in the transportation business right out of university. Which didn't make my mother extremely happy. You could ag degree and go lease operator, but I was doing that in order to participate in the operation and stay close to the farm. And eventually my brother and I rented some land, and then I grew my side of the business, and it wasn't really working out with different risk tolerances and where the direction was going between me and my father. So I went on my own, and I was very aggressive in the early 2000s, farm expansion and exploring different crops. I had a lot of strong influences in the grain marketing side that really influenced me, got me where I am today here. And I had an exit in farming, and then I went environmental consulting, and I grew that business, 12 and a half times. It was I had success with that, had an exit on that one, a positive exit. And the last 10 years, I just been studying the markets. My son introduced me to technical analysis, and I thought I recognized an opportunity to fill a void in grain marketing, taking a different approach than most. And here's where I am today. So
I think you're being humble, because based on ChatGPT, it says your Klarenbach reports are essentially subscribers across 6 different continents. Am I right or am I wrong on this?
Yeah, I don't know what the current number is, but yeah, there was at one time it was definitely 6. So yeah.
No, okay. Well, let's jump into what I'm most interested about. I'd love to take you down the commodity markets, and if we get there, great. But you got a massive advantage over me because I don't do any of the marketing on our farm. So other than providing some cost of production work, Jeff is 100% in charge of that. So I want to keep it to the land side, because this is the side that interests me the most. And this is the side where producers, I think, other than equipment, this is probably the hottest topic in ag, to be fair.
Yeah.
So first off, did you expect the uptake on the podcast when you did it with Tim? Like, I've based on YouTube, and I looked at it today, it was 3,700 views in 3 weeks.
Yeah.
It was what everybody was talking about every time I talked to them. So what were your thoughts on that side of it?
I sat on this for about 2 years. I've had the idea for 2 years, and I kind of looked at the data, and I didn't complete it. If I would have realized the uptake on it, I would have had it a year ago, But really what happened was is a buddy of mine, I mentioned him in the video and in the report, Kevin Gunn, he really kind of lit the fire under my ass, and he said, "Hey, have you looked at Saskatchewan Farmland?" I said, "Well, I got charts and stuff. I'll show you what I have, but I haven't completed a study which I want to do." And he said, he pointed out, he thought there was an Elliott wave pattern forming, and farmland pulled back 62% in the 80s to the 90s in Saskatchewan. And of course, from a technical analysis point of view, that piques your interest, right? So then I started doing the report. Kevin took a look at it, and I kept it really simple. I'm not making any broad. I believe those results will happen at some point. I've been very public about I don't know when that's going to happen. And in the video, I state the sell signal hasn't triggered yet, but it's something that I want to bring awareness to this possibility. This generation hasn't experienced it, so I want to bring that awareness that it could happen. So,
yeah, and I think the part that I mean, and you said it in the video, this is not a science, guys. So the biggest part I laugh is just the emotional response to it at sometimes, right? Like it actually, you were very clear in the video that your opinion is that you'll see this, and that's an opinion. And the kicker is that we won't know. Like, give me 20 years from now, you and I'll sit down and we'll be able to say, okay, were we right or wrong? And the funny part is, and most of the guys that follow me, I'm actually a different opinion than you, and it's fine because we're an ag. But the funny part is we won't get to figure out, we're about to say it now, but we won't get to figure out who's right or wrong for a decade probably, right?
Yeah. Yeah, that's the thing. So in my analysis and my reports, I really wanted to bring awareness and prepare people for a potential outcome. And I try to get ahead of the market. Like, so there's no panic. Why did canola drop below this level? What happened? Well, you were prepared for it in advance. That's my intention. And the same thing applies to this video here in my report. Like, it's not an area it's an area of caution, area of a level of interest for me, as I like to refer to it. So.
Yeah, and the interesting part is I think the question differs based on the time length, right? Like, if I said a century out, do we think land's gonna be worth more than today in a century? Most likely. Do we believe that there's going to be short-term disruptions where it could drop a certain range, or it might drop or soften? I think we're both on agreement there. It's just, I think that the number one is you scared, pardon my language, but you scared the shit out of everybody when you talked about the 61% retraction, right?
Yeah. Yeah. Then, yeah, like I and the reason I think that is not because I'm a doom and gloomer that I wish it could happen. After looking at so many different charts across so many different asset classes, you come to the belief that all assets price will move in a similar pattern. And this would be the first one I've looked at. Well, the history is very technical. That chart.
Oh, yeah.
Technical. Yeah. And if it doesn't continue, that would be the first one that I've come across, right? So, time will tell, right?
Well, and that's the thing, is your conviction's based on data, which is right up my alley, to be fair. So what you're saying is based on what you're seeing. And so that's kind of what I want to do for the next, let's call it 45 minutes, is I want to go through some of the things and just go back and forth on I want your thoughts on a lot of this stuff. Okay.
Okay. Sounds great.
Okay. So number one, you are very much on the effect that human nature always remains the same, right? Yeah. So my first question for you, what does the changing landscape in ag do to that? So I'd work with a lot of larger scale farms, and it's always been a lifestyle in ag. I mean, you and I both said it. We went back to the farm. You and I actually have a very similar story. Went back to the farm, even though it was not profitable at that point, got told to go get a different education. And we both ended up back. And now today, what I find is the producers I work with are probably more business minded and more ROI minded, and use land more as a liquid asset than an emotional asset than they ever have in the past. Do you believe that actually has a change on some of the dynamics of what your chart shows?
Well, I do believe there's better operators now.
Yep.
There's less operators. They're more educated. Maybe they went to school, got a commerce degree, got an ag degree. Doesn't really matter. Got some education. The service that you guys are providing certainly elevates that, and I think it's a great skill because I definitely believe that farmers are more educated, more on top of things than they were. When I started farming, I had a spreadsheet. A buddy of mine still using a spreadsheet from like 96 or 97. That
Yep.
just simple cost of production spreadsheet replicated from the Saskatchewan food, just made into an Excel sheet. But it's a lot of guys didn't know what their cost of production were then. And I had no choice but to be on top of that. And I think there might still be some guys like that now, but there's certainly a lot less of them.
A large percent of the industry is probably still there, but I would say a large percent of the acres probably have moved more into the business side.
Yeah.
So do you think that changes the dynamics a bit, the human nature?
Well, I mean, it probably brings greater awareness to your ROI.
Yeah.
And I mean, we're in each one of these markets, it doesn't matter if it's cryptocurrencies or farmland. The common participant is us humans, and our behavior, as I don't think it's changed ever, right? We're motivated by fear and greed, and what makes us feel good, we want more of, and what makes us feel bad, we want less of. And from a ROI point of view, like I think in the 70s, much the same message was given that they're not making farmland anymore.
Yep.
Population's rising, and there's a lot of reasons why that commodity spike happened in the 70s, I believe, outside agriculture. But that changed in the 80s, right? And it took a long time to get back to where we were in 1981, for example, in Saskatchewan. And the optimism that was probably my father and his generation experienced in the 70s
Yep.
was not there by those same individuals in the late 80s and early 90s.
90s.
It was quite changed. So, whereas, they bought as much land as they could at one point, they went to keeping as much land as they could at another. So, and there's a generation out there that I use the term PTSD, and it's not meant to be derogatory, but they got their nose bloodied, and it's impacted them quite a bit. So I think maybe I'm kind of on a tangent here, but I think human nature is just going to be we just behave the same way. And if we get in a situation where there's no profit, I mean, that affects your decision making. So.
No, and you're not wrong on the numbers. I mean, 65% of farms are over the age of 65. So the group that actually has seen those interest rates and that land value drop and everything else is the group that still owns the majority acres and is probably the group that has to make a decision in the next, let's call it, decade or so, right?
Yeah. So again, I'm a bit taken aback by the interest in this study and that, but I was at the trade show yesterday, and of course, it's a common topic, and
that's why I have you on, Trent, because it is the number one topic.
Okay, and the people I talk to who are most receptive of the possibility,
yeah,
and the least dismissive, are probably 60 years of farmers who are 60 years and older. 55 might be. I'm 53, so I didn't understand what was going on. I didn't know what was going on. My parents shielded me, but I understood after what it was kind of like, but I didn't feel the pain.
Oh yeah.
At that time, like a lot of them did. And so the older guys are certainly more receptive to the possibility of it happening again. So.
No, and I'm with you on that. Is they're more willing to talk about the hold back, watch the interest rates. I mean, we've seen this before where I think the younger guys, like you said, they haven't bloodied yet, right?
Yeah. And in all fairness, they have no reason to expect farmland from going. They expect to keep going up and to the right. They don't have no reason. There's no reason for them to think it's going to change. So, yeah.
So the other line I took was the levels of interest is kind of what you and Tim were talking about. So if land were to start a retraction, when does the producer, like, we talked about the trashing going back to the past high, right? Back in 1981.
Yeah.
In this day, when does the business producer start buying back in? Like, does he wait for that, or do you say all of a sudden that it drops $500 an acre and, well, this is a deal, I need it now? Because demand is still there. Like, I'm still running land deals a significant amount of my year.
Yeah. Well, I mean, that's a tricky question, right? I'm a trend follower. So my mentors taught me to buy on strength. So that chart I shared, it's quite amazing that from 81 to 93, land dropped 62% down to the previous resistance level, right?
Oh yeah, it hit the yeah.
And so if you're a technical trader, you look for that, anticipate that to happen. We've been doing that in canary seed and lentils and everything, right? And again, no one's charting that either, but it's still behaving in the same manner as Apple or Bitcoin, right? So you anticipate it to happen, but I think I talked about it in that video with Tim. I just forget the date exactly, but the least risk time wasn't to buy in 1993. It was actually to buy like in 95 or 96 on a new
When it got through that point, right?
Yeah, as a technical point of view, because otherwise you're trying to catch a falling knife.
Yeah.
And actually 93 was interesting because when Tim shared in that video, he was involved in farm credit with their process of, I guess, selling their land and making arrangements that way. That ended about 1993.
Okay.
So it's kind of interesting how that time worked. But yeah, so lowest, that was the best time to buy, 1993, but the lowest risk, in my opinion, was at a later date
After that.
So yeah.
Okay. The other one I found interesting was so the graph, because you took the 2023 census data. I think it cut off at 2,800 to 3,000, kind of at the top end there. And I would say, I mean, based on FCC's numbers, we're up another 15% a year, probably for 2 more years. So like I got guys that are buying at 4,000 to 5,000 right now. So when does, like, I know you said there's no immediate when it's going to happen, but if we're already 25 to 30% higher than that high already, what does that mean?
So it was funny. We recorded that video, and like the next couple of days or before we sat on the video for a while and get it, before we decide what we're doing with it. But in the meantime, I got new Stats Can data for 2024. I was expecting it to happen in November. So I think it's been published, but so the 2024 level is right at that upper
30.
trend line in that channel. But so it's a level of interest. So as a trader, you look for reasons why the price could slow down moving in that direction. And if you're an experienced trader, you realize that it doesn't have to happen.
Okay.
So it's a level of interest. It's an area where I want to watch how the price reacts to this level. And then it might be a lower risk time to buy at a higher level, if it keeps going higher, right? Because this is a level of historical resistance.
You're still buying on the upswing.
And while no one's watching it, these things just repeat. Like the same thing happens in lentils and canary seed, right? Yeah. So I can't explain why that is, Evan, other than it's humans involved in it. And maybe we live in a matrix, who knows, right? But
well, and to be fair, you did say the RSI rank at the bottom. It can stay in those higher numbers for a longer period of time, right? Like we could be in that for years here, right?
Yeah. So what I did is, Evan, it's not in the study, but it's in that video. If you look in that video on the chart, you'll see a red line around 31.85. And we touched on it briefly. Tim asked me if I could go higher. And I said, absolutely, it could. And that level is 22% higher than the numbers in the video. So that's quite a substantial jump, right? And it could certainly do that. Now, that level identified, I didn't spend much time on it because we're at this previous resistance level. We can talk about that level after, but it's a Fibonacci extension level. And, so it's an area where I think it could get to. But the interesting thing is, I didn't realize this. A farmer called me at talked about it with me. He posed the question, how much of a retracement is it from that 31.84 level down to the 81 high?
Oh,
like quick math, it was like 62%.
Oh, yeah.
It actually might be more, you know what I mean? I think
it's huge.
yeah. So in that 62%, we always anticipate the key levels are a 50% retracement, and a 62% is quite common. Like that's a buy signal for algorithms, a buy signal for technical traders. Take a small position, see how it goes. Ironically, that was 81 to 93 drop too. So yeah.
Well, and the interesting part is, I mean, we've got such inflated equity balances because of the 10x growth in land over that period, that even at not a 60%, but let's call it a 30 to 40% drop, most farms that, if they haven't been progressive or haven't been buying over the last 10 years, probably have that equity just sitting there from the first 10x jump. So it's not, for the guys who are doomsday ready to jump off the bridge, it's not as bad as you think. It's taking your purchasing power away that the initial pop did. Now, for the guys who've been progressive, then it's a whole different equation, because you're probably leveraged on your land more than they can sustain that drop, right?
Yeah, that's the question I ask. So, what point does the pain start, right? So if there is a drop, fall back, I've been asking lenders in private conversations, what do you think, how much of a drop would, like, result in selling, whether for whatever reasons? And yeah, so that's the question.
And how much before the lending institutions get their own fear, right? Like you said, you're the one using the line greed and fear. Well, the lending institutions have it as much as the human nature on the farm side has it. So when do they start pulling back from agriculture again, right?
Yeah, I remember a time when the message was from one of the banks in Well, I remember it with the Royal Bank when they pulled out of Betonia, and then also another bank in Kinnersley there. They weren't interested in lending to farmers, is what the message was. They called loans in. This is in the early 2000s. Calling loans in and didn't want to finance anymore.
Yeah, when I started farming, the nationals weren't really an option. To be fair, it was credit unions or farm credit to be upright front. And then over the last decade, most of my big guys aren't with credit unions and FCC right now. They're with the national banks, just because of the type of lending and the aggressiveness that they've had over the last decade. Once they saw the land take off, right?
So I used to go for breakfast with the older guys at the local restaurant when I was farming. I'd go in there and
Coffee Row. You went to Coffee Row. Come on.
Yeah, 6 or 6:30 in the morning. So there was still coffee. I was eating breakfast. They were having coffee. And one of the guys was an intelligent guy. He had his tough time in the 80s and 90s, and he was a large farm at that point. But I remember telling me a story. Things started turning around. It's about 96, 97, 98, somewhere in there. And his banker came out to him and said, "Hey, how can we want you to borrow? How can we lend you some more money? How can we have finance?" He said, "Where were you when I needed you 10 years ago?" And it's hard to add, but that was the conversation he shared with me. So
yeah, and I mean, we saw it over the last decade. Most of the guys that ever came into Maverick, the line that we always used was, the banks will give you enough rope to hang yourself. You're hiring us to make sure you don't.
Yeah,
like that was the, going to call it an elevator pitch or whatever. That was what we were using, because it was they'll let you go right to that leverage model or right to that covenant ratio, and they'll let you do it. But just know, when times turn around, they'll also be the first ones to pull the rope.
Yeah. And I just assume that as humans, we'll buy as much house as we think we can afford and invest in our business to the point as much as we can, right? Like that's I think that's, how much can I borrow? Okay, I can afford this. Let's buy it, right? Just the way it is.
Let's pause the truth about ag to go into financial acumen. We are facing high cost of production, volatile markets. Come work with Maverick Ag. Why would you come work with Maverick Ag, Gibbs?
I'm a big believer in doing what you're good at. And so if you don't want to spend time in the details specifically of your financial management and financial acumen, then you're better off to partner with somebody. Run your farm, grow your crop, raise your animals, whatever your specialty is, and have a high level knowledge of the financial side. But let somebody work with you to get into the details and and let you know when debt service is getting close to offside, what your cash flow is doing, and what months you're going to be tight, so that you can run the farm the way you want to be, as perfect as possible.
If you want someone to help you deal with the banking regime or look at your next equipment deal, reach out to Maverick Ag. That's maverickag.com. So yeah, the interesting part I found was Tim mentioned the land affordability index, which I'd never seen before, to be fair. And I had to look it up on the farm credit stuff. And I don't disagree. I mean, it makes sense. But we always went off the old adage that when I was young, land was always overpriced. 10 years ago, land was always overpriced. And if you ask people today, land is still overpriced, right? Like, that's the human nature part of it. So I would argue that we've never been able to actually afford to buy land. And I mean, at this point, for sure we aren't. But are guys learning to separate the real estate discussion from the operating company? Like, we can own land without being farmers, right? What are your thoughts?
Well, I agree with you. When I was, any study I've ever done, or even when I was purchasing land, and it always sold for greater than the economic value of it, in my opinion. And
yeah, I don't find any productive capacity tie to land values across the last, and I don't have the trends in front of me, but I've never been able to figure it out based on productive capacity.
Yeah. Yeah. So, I think that works. Well, the margins are there.
Okay.
But if we enter into a period of tighter margins, higher, whether that's commodity price driven or interest rate driven, or who knows what, right? I think it can be maintained. So.
Yeah, the interesting part, I mean, we use it with our clients. I showed it at Farmer Coach. It was if you actually take your Olympic gross margin over the last 5 years, let's call it Olympic average. So drop the high, drop the low, take your average 3, and compare that on a per acre to your land value per acre. It gives you a percentage. And when I started consulting back at MNP, the percentage kind of used to be that 10%. And it used to be our rent versus buy structure of, if it was over 10%, you bought it because the production capacity was decent. And if it was under 10%, you rented it because it probably wasn't as productive as land as the value was worth. And it was the one measure we could do against different geographies. So I could do one in Ontario, I could do it in Saskatchewan, Alberta, and it gave us a measure. Now, the interesting part is that 10% is thrown out the window now because it doesn't exist anymore. Most of my guys are in that 8 to 9%. And our one farmer that I know from Ontario, when we looked at his at Farmer Coach, it was actually in the 2% because his land's $20,000 an acre, right?
Oh yeah.
So it gives that pushback on the affordability index, because in Saskatchewan, and even Tim said it, it's actually the least affordable place to buy. Yet we're still seeing those numbers go through the roof, and the percentages are still showing where it's at, right?
Yeah. It's interesting because I'm on the west side of the province there. That's where I just moved from there recently, and they struggled to grow a crop of any mean for the last 8 or 9 years.
7 years. Yeah.
And it has had zero impact on
the land
values and probably machinery purchases also. It's
well,
a really interesting thing to me.
Yeah, and we laugh because we always compare brown soil to black soil, right? Black soil's got less volatility, grows a bigger yielding crop, all that stuff. And right now there's brown soil areas that are selling well above black soil areas in this province.
You remember reading the Western Producer as a young teenager or a young man?
I'm going to say
Western Producer. Pardon me?
I'm going to say no.
Okay. Well, I remember this. You'd go on the Western Producer and you'd see land. You wouldn't see it. You couldn't find any land for sale through West Central Saskatchewan.
Yep.
Never. It did not make the Western Producer, but I would go in, but there'd be columns and pages of land for the east side of the province.
Yeah.
In the higher rainfall area, probably maybe lower freight rates, maybe. I don't know how that works. But anyways, it was just pages, and guys were actually buying. I know some guys who bought land on the east side of the province because it was considerably cheaper than the brown soil. I think that's changed, right? But you're telling me it's still higher.
For sure it is. Well, no, the percentage on here is higher. The value, no. Like I got $7,000 land on the west or the east side of the province now in certain areas.
Yeah. Wow. Yeah.
Yeah. Okay. The other interesting part I wanted to talk on was the factors that attribute to rising prices, right? So you brought up interest rates, inflation, all that, other items that come into the effect. So going into the 80s when we had double digit interest rates, you could almost tie it to the drop in land prices, right? Like I'm not going to take a loan on a land at 18%. Now, how does the fact that even today's rates, I can get let's call it a 4.5% interest rate swap on a 10-year loan. Coming out of COVID, there was some sub 2% for 10 years. So for guys that understand their banking and their leverage model, does that have effect that's not a sign of a rise of a factor attributing, right? Because it's actually driving. I mean, guys are still buying because this interest rates technically are still pretty low, right?
Yeah. 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 My first loan was 9.5%, 1994.
Yeah. And we have 10-year swaps at 1.8% right now.
Wow.
So does that change the dynamic?
I think interest rates. I've always kind of been of the belief you can raise interest rates. You can double them from 1 to 2 or whatever and have a negligible effect. But at some point, the tide shifts. You reach a tipping point.
Yep.
And I don't know what that level is. I think they're still low enough. It doesn't matter. At one guy I respect, he said you need 2 years of double digits for anything to impact the price of land.
Oh,
I'm sure that'll happen, or I'm sure that would impact it. But I look at it and I do the simple math one time. I took out a mortgage calculator, and you would know the numbers better than me, I'm sure. But I assume that people can they buy as much as they can afford, and if you could afford a $500,000 house at this rate, raise the rates 2%, that drops that house down to $400,000. It probably doesn't happen at 1 to 2 or 1 to 3 or 3 to 5, but it might happen at 8 to 10 or something.
Oh, and I think we're probably going to see it on the housing market here, because I think 40 to 50% of the loans, that came out of COVID are going to be renewed in the next year. So we're going to find out what that does to housing prices, I think. But
yeah, I think there's a point where interest rates rises really start to matter. I don't know what that threshold is. But I think they're still relatively low now. So.
What are your thoughts on the fact that farms, going into the 80s, yes, they had money, they had some good years in there, but like across the client mix we're seeing nowadays, there's more working capital and equity sitting in agriculture than probably ever in the past. For any farm that hasn't bought land in the last decade, the ones that I work with at least are sitting on cash, right? So does that change the dynamic on land prices if we're sitting in a position where a lot of farms could buy even at these levels and it wouldn't have to be long-term financing?
Sure, I'm sure it does, right? It changes your risk thresholds and your ability to maintain. I don't know. I think back in the 70s, there's all sorts of stories of buy a 4-wheel drive tractor when they first came out, buy versatile tractor and buy it in the spring, pay for it with a crop in the fall, that sort of thing.
Oh, for sure.
So there was cash. These farms are smaller, of course, and the land was, $500 an acre, $800 an acre, not 8,000 or 5,000, right? But yeah, it's just that point where if you start having liquidity crises and you start losing money, and that some of that can disappear relatively quickly, and that's just want to be cognizant of that possibility of that happening.
Yeah. Well, and partially, I think guys have stronger working capital because they've utilized some of that land equity to push some of their lending out longer term, which then fix their working capital issues, right? So they might have cash, but it's still sitting as leverage somewhere, right?
Oh yeah.
Okay.
Yeah, there's a lot of, from what I understand, there's healthy balance sheets, a lot of cash out there. Yeah.
Oh yeah, this is the health, and this will go against a lot of people. I might take some hate for this, but based on what I'm looking at, there's some of the healthiest balance sheets I've ever seen in agriculture coming out of the last 4 or 5 years. Which, you're a commodity marketer, you could probably tell me why that is, but
yeah. But and to your point, if the industry's healthy, you can absorb couple of bad years before things change, right?
Well, and that's what I'm finding with land too, is it's not necessarily, like we said, it's not the productive value. It's not brown versus black soil. A lot of times it's the competitive area, right? Like my guys who are still paying low, it's because their area hasn't been real competitive. Like there hasn't been land bids, there hasn't been auctions, there's no big farms outbidding each other. And then you go to certain small pockets in the province and it's just, whether it's rental or buy, it's through the roof because you got 5 decent farms that are all outbidding each other on every parcel that comes up, right?
Yeah, I'm sure the dynamics have changed quite a bit in the last 20 years in that regard. But when I was farming, it was the tail end. When I started farming, tail end of the 90s. My buddies had moved home, and it was competitive then. Smaller numbers, but it was still relative. And yeah, it was competitive. Definitely competitive then. It was.
Okay. How does perception come into these accounts? So we talked about greed and fear, and we talked about, and even Tim was mentioning, like, and I think you said it on the podcast, that Saskatchewan's always been seen as lower than everywhere. Excuse me, lower than everywhere else, right? So then once we saw that affordability index, it was like, well, no, it's not as affordable as everywhere else, but the price of land per acre is lower, right? So I think there's still a perception that, and I have that perception, that Saskatchewan's still a great place to buy compared to other provinces. Does that throw a hitch anywhere in at least the Saskatchewan graph? I mean, we could extrapolate your information across Canada, and I don't think it would change very much on the trend analysis. At least I don't believe it would. But in Saskatchewan, does that perception of low cost have an effect on the buying power or the human nature aspect?
Oh, I think absolutely. I think any investor wants to buy, the idea is to buy low,
Yeah.
whatever's, you want the best, you want to identify the best opportunity relative to another one, right? So, and Tim brought it up in that video, Saskatchewan went up 13%, and I forget how much Alberta went up the last year, but it was the same
four to six. Yeah.
But the same dollar value amount, right?
Yeah.
So obviously, I don't know. To me, that tells me that obviously Saskatchewan. I don't know the number of sales, but obviously it's rising faster than. It's still viewed as a bargain, I guess, right?
Yeah.
Relative terms. So.
And I think most farmers are seeing that when you see, I mean, whether it's Hutterite colonies, whether it's some of the consolidated farms, they're moving into the province, and part of it is I'm starting to see is that, like we talked about earlier, the emotional side of it. It doesn't have as much play as it used to. It used to be you never sold land, like it was almost a sin. Let's be fair. And now we're starting to see some larger operations that buy and sell land almost like it's a commodity, right? Like they'll move into an area, and if the price jacks in 2-3 years, they resell it and move somewhere else. And I just think it's becoming almost more of a liquid asset at times.
And I wonder if that's because it's this distance from the first generation. So
for sure.
Like my grandfather, I'm sure had, that's what he wanted, to own farmland more than anything else. He got it, did whatever him and my grandmother had to do whatever they did. Keep that. I'm sure that land, that particular quarters, whatever happens down the road, I'm sure those quarters will be the last ones to be sold.
Yeah. Well, and I think you and I talked about the tech side too, right? Like we have enough data now where we know what land is actually making us money compared to land that we just have an emotional tie to that might actually be losing us money, right?
Yeah, I think there's probably less emotions tied to the land now than there was with the homesteaders, right? So.
Oh, for sure.
It probably leads to better decision making. So.
Okay. I got one more question for you on the land side, and then we're going to talk a little bit on commodities, because I do want to pick your brain on that side as well. So You've done the study, you've got the data. Whether we agree or disagree is totally irrelevant. What would you tell a producer right now who's evaluating a rent, buy, or sell land scenario from your data, from your side?
So my data from my side. Okay, so I'm looking at that chart. It's a level of interest to me. And I said in the video, if I was bought, if it was any other asset, I wouldn't buy at this level.
Okay.
At this level of resistance, and from technical perspective, I wouldn't actually sell at this level either. You know, if you kind of sell at resistance, but I'm not getting the sell signal because they want to wait. How's it going to react here? Okay. Now, if we drop down, break below that EMA, in the past, whenever it's done that, that's led to a drop in prices of some degree. Right? Sometimes large, sometimes small. So it's an area level of interest to me. But I think what I would really look at, and it's outside the scope of my study, is the rent versus the cost of the land. Like, what does it cost to own that land versus what does it cost to rent it?
Yeah.
And from my understanding, there's quite a divergence between the two right now.
Oh,
and
yeah.
I don't think they ever get together, but there's quite a divergence right now. So.
Going to pull you away from the podcast here to go into Farmer Coach. We have opened up the registration for November. Brand new courses, the executive, the foundations. Heebs, why would you come to Farmer Coach?
Yeah, I think 2 quick points. The first one is just a baseline knowledge around farm management, right? From accrual statements and debt service ratios to human resource policies that we've seen work on operations and businesses kind of around the world. And secondly is just knowledgeable peers. It's not just what you learn, from the coach and being in the program. It's what you learn discussing with 10, 15, 20, 25 other operations and what's worked and not worked on their operations. And I think those 2 pieces are pretty invaluable.
With more than 90 producers having gone through the course, you have an online platform. It is probably one of your largest peer groups you can be a part of. So sign up, go to farmercoach.ca, and we'll see you in November. Yeah, I think we're starting to see that gap get really wide, especially as interest rates moved. I mean, when pre-COVID, kind of at that 2 to 3%, it was probably relatively close, but most deals I run today are rent might be 100 to 120 and interest might be 180 to 200, and then you got to throw principal on top of that, right? Which is equity in the end. I get it, but it's still working capital, right? So it's those, like, for most of my guys, I would love for them just to rent, to be fair. And I realize you don't get the equity bump, but at the same time, we've already hit the 10x, and I'm not gullible enough to believe we're going to 10x again. So from my standpoint, it's we actually have to make money farming now, because the real estate's already had its day. Is it still going to move quite a bit? I still believe it's still got room to go, but you're going to have to learn how to farm, because that's where the majority of profits is coming for the next generation.
Yeah, and if you haven't been profitable, you got to really assess whether it's a good idea to expand your operation in that manner. It was back in the 70s or the 90s, and I remember my parents' operation was a mix of owned land, rented land, and custom farming.
Yep.
There was years when that custom farming was the better, more lucrative choice, I guess you might say. So.
Well, and then I think I've told the story on here with Heaves before, but I mean, one of my toughest moments at MNP was sitting a client down and saying, like, I think before the price spikes in the pandemic, like, we were $50 an acre was kind of the average farm profitability over that decade there. Well, rent in some areas was peaking 80 to 100. So it was almost, you're telling the client that he'd have made more money to go sit on a beach and rent out the land than he would have working 3,000 to 4,000 hours and putting the grain in the bin.
Yeah. Well, yeah, and you mentioned that. So when I was farming, these numbers will sound funny to people, but I figured if I used the Saskatchewan government custom rate calculator, it's cheap.
Yep.
And I felt that and it was around $55 an acre roughly.
Yeah.
That's what it would cost to hire someone to do the farm. I had my costs below that.
Yeah.
For honest, I probably didn't calculate me in there, but
yeah. Which nobody does, Trent. Nobody ever throws their own numbers in there. Come on now.
So I didn't either. But if that number got above there, then I felt I was better off hiring the spraying done, hiring an old. So.
Well, and I think part of it, and I've seen it lately, which is new, and we've talked about it before, is that the family office concept of, so these farms have their 10x wealth on their land. We're saying that it's not profitable to buy land right now. So what they're doing is they're essentially using their current land equity and investing outside of the farm. And outside might be into venture capital. It might be into a business. I mean, Farmer Coach and Maverick are essentially, the first 2 years were financed by Hebert Group to get us up and running. Now, I mean, we're self-sustained now, but at the same time, we're still within the family office. And I would argue, I want to shoot for the fact that we could be anywhere from 30 to 50% of total profit if we do things right and we build this business correct. So I think we're starting to see a whole bunch of the business side of ag realize that there's other ways you can utilize land to build businesses and call that entrepreneurism, call it whatever you want. It's just a different concept we've never seen, because like growing up, you didn't take money out of the farm. You didn't invest in non-farm assets. I mean, that's part of why succession is what it is today, is because every dollar went right back into the farm, right?
Right. Yeah, so what that tells me is they're chasing return.
Which is great.
Right. Yeah, but if that return's better somewhere else, if you can recognize that someone else is too. So I just try to identify what could be possible headwinds to, for the price to come down. There needs to be at least one catalyst, and likely a series of them. So.
Series catalyst. Yeah. So anybody listening, guys, again, this isn't a perfect science. Nobody's got the crystal ball, because if we did, I would have bought every acre I ever had 20 years ago, and nobody listening did that. I know they didn't. So to be fair, this is just a educated guess. It's just different. You're using trend analysis and a lot of your analytics, and I'm using what I believe is the business side of ag and changing dynamics and stuff like that. And again, we won't know who's right or wrong or close for a while yet. So it's an interesting debate. Let's put it that way.
Yeah, and where it's neat is when the fundamentals, I'll call what you're presenting as fundamentals, align with the technicals. And when that happens, your conviction certainly gets stronger.
Yeah. Okay.
They're probably not aligned right now.
Oh no, I would say they're not at all, because, like I said, when you wrote that, my first instinct was not a chance. Especially when I heard the 50 or 60% retraction, I was like, oh god.
Yeah. And I think what maybe got lost a little bit is I wasn't predicting at the time that it was happening, and I just have to believe that, because I just see this in every other house.
Well, yeah, if you're not confident in your own convictions, then both of us have issues, because we're in the wrong jobs then, Trent.
Absolutely.
So let's touch on commodities, because I do got a couple questions. As I said, it's not my strong point, so I'm not gonna pretend to be an expert here. That's not my unique ability, and it's not my role, so I'm okay with it. But you seem to be one of the only people that I know, and I read your report back, I can't remember how long ago it was, that predicted canola was going to do what it did. So what gave you the confidence to come out and and don't get me wrong, I think your top end was 19, which maybe we could get to, but nobody else was predicting it moving up, and you predicted it. So what factors, I guess, that threw you that way?
Well, it just goes back to, I've looked at millions of charts, and they move in a similar fashion. And I can't explain why these charts all move in a similar fashion, other than there's humans involved in the decision making.
Okay.
But I just felt that canola has one more run in it. Now, that recent pullback is certainly testing that conviction of higher prices.
Oh yeah.
But and I got that. So you mentioned 19. Now the head and shoulders measured move, and so you anticipate it to get there at some point. But the key word is anticipate, and you want to be prepared for the possibility. And I was just looking at technicals. I just felt that these things move. I just felt, just by looking at the price chart, that I could move. Now that got tested. That conviction got tested when China came after that tariff. But you know what's crazy about that is it wasn't a tariff on the seed.
On canola, it wasn't on seed; it was on the oil.
Well, it happened. I'm like, oh my god, I got egg on my face. I'm gonna have to, And then I look and, okay, well, look where it bought it, and it's finding support at this trend line, and there's something else down there too, moving out or something. And interesting. Okay, well, let's just give it some time, see, and we had a nice recovery after that.
Yeah, and the interesting part is guys, and again, it's one of the hot topics. I mean, guys are real quick to talk about $700 nitrogen or $800 nitrogen, and why that's not correlated with the grain prices. And I mean, that's a whole nother argument for another day. But what most guys missed is that there was the opportunity to book $16 canola for next fall. Like, so if you're buying $700 N and you're closing the hedge with $16 canola, and I understand some guys who haven't grown a crop are a little timid on that, but 10%, 20%, and maybe you don't lose like 16. You're taking a pretty safe bet that it's going to be somewhere in that range or lower by that point, I think, aren't you? Like, tell me if I'm wrong.
Well, I think lower prices are coming, right? I anticipate this rally. I don't think it's going to be sustained. Maybe it's over, right? And so I think lower prices for longer, meaning lower price in the coming years. So the guys that asked me, should I be pricing some? Should I sell some? I said, are you profitable at these levels?
Yeah. What's your cost of production?
Yeah. But it seems like a good price. Will you sleep better at night? Yeah, you price some. Try to eliminate that emotion, and I encourage them all to get a brokerage account. You can own it back on. You can sleep better at night, and
buy it back on paper.
Hopefully buy it back on paper and participate in a rally. If you can, hopefully that can work for you. At least you can sleep better at night.
Well, and I laugh because you talked about PTSD a little bit, and it's like that on grain prices comes evident every time because someone will sell, and then 2 days later the price goes up, and I'll get a phone call, and it's like, well, I shouldn't have sold. It's like, no, at the time with the fundamentals we had in place and with the cost of production and the profitability, that was the right decision. Now, did it go up? Sure, but at that point you made the right decision, so just forget it and move on.
Yeah, and I battle that. I've struggled with it a little more than I am today. With I can't be wrong.
Yeah,
of course I am, but you just can't expect to get the highs. There's so little volume traded at the peak, and you never know when that is till after the fact. And there's enough meat in the middle of the trend. If you're profitable, look a profit. Like that extra. I wish I had the gains back that I've given up, waiting for that extra move in the price. Like it's a shameful amount of capital, right? And I always go back, hey, what's going to hurt me more? What's going to affect me more?
The drop?
$10. Yeah. It's always the drop. It always has a lasting impact on me, on my psyche. So.
Well, it's funny because I listened to a lot of Berkshire Hathaway and Warren Buffett and Charlie Munger when he was alive, and that was always the question: is what was the investment, or what was the worst decision you've ever made, or the wrong one? He's like, the worst ones we ever made were losing the opportunity cost, right? Like it was the fact we didn't invest. It was like our worst investment was not something we invested in; it was something we didn't because we just didn't think the fundamentals were there, right?
Yeah, it's tough, right? But I mean, you have to just live with your decision. You made the best decision, information at the time, and you have a profit. It's like here's my attitude on business: is your success is not determined by how much money you make; it's how much you do not lose. If you lose too much, you're not in the game. You're out of the game.
There's my clip. There's my clip. There's my clip for the podcast right there. Success is determined by what you don't lose. That's.
I think so. Okay. I've been on both ends of it, right? It's just what it is.
So canola's the easy one. What do you do when you got wheat and you got wars going on and geopolitical? Like, what's like as a marketer, which I would not want to be, Trent. I do not envy you at all with all that's going on in the world between tariffs and wars and everything. What do guys do?
Those wheat charts until today they started looking, maybe even yesterday, but today they're looking. I got a rally, I think, today.
Did they?
I had a busy morning, but I don't know the numbers. But it's tricky because I like Chicago wheat. I think Chicago wheat drives the wheat market. Not perfectly, but the buggers, the Chicago and Kansas City were in a bearish stance, and Minneapolis was bullish up until like a week ago, right? Above these moving averages, I would say bullish, but it looked like it was on a bullish trend, and of course that last week or so it just capitulated. But these prices here, it's really tricky right now because I look at the Minneapolis, for example, and it looks like it's in a stage 1 accumulation. It's going sideways. It's either going to start another rally higher, or this is a continuation of the downtrend. So I'm kind of waiting to see what happens there. There's quite a band, like a 70-cent band. The range there needs to work its way through, but yeah, red wheat's been really difficult. Red wheat's been difficult the last year because it's just kind of moved sideways, and there's no clear trend of where it's going.
Well, and from my job standpoint, it's terrible because essentially I'm telling guys how you're going to sell into a loss and then try to make it back up on some of your specialty crops or canola, right? Because wheat right now, I don't have a farm that it probably is a profit right now at the pricing where it's at based on cost of production. So how do you, that's going to be the one that'll test the PTSD, is selling into a loss, but realizing that you're mitigating the downside risk.
Yeah, and that's what I try to do, because it's like right now it's going sideways, so I'm not getting a clear signal, right? But when I publish my sell signals, they're what I consider to be a trend change, like a trend change, and that's just it looks like the trend has changed. Liquidate your position, and use some other tools you could do to make some up on the downside. But I mean, just I don't know. I've done it. Most guys I know have done it. You ride that thing lower because you go through those 4 stages of the market structure. I don't know if you ever seen my presentation on that.
Yep.
I talk about the different emotions. Yep. You go through complacency and then enter denial and then anxiety. And it just gets, if you're not aware of your feelings and what that might, I think your body will tell you where you are in the market. And if you can identify that, it can help make your decisions. But if you start making lower lows, lower lows often lead to lower lows.
Well, it's funny because you missed the emotion one that you have. I have a graph that I use for decision making for most guys, and it's the same thing. You have informed or uninformed optimism. So you get the deal right off the start, and you're excited, but you know nothing about it. But yeah, land came up across the road. I'm buying it. And then it goes to informed pessimism because you look at the price and I can't afford it, and then you go down to what they call the valley of despair, which is where most ideas go to die because you're so paralysis by analysis, you don't move on it. And then finally you get to informed optimism, which is, okay, I can do this, or I can set up my debt like this. And then you success. But it's that emotional roller coaster that honestly affects most guys' decision making, right?
I agree with you, yeah. Probably parallels are life too. When you're young.
For sure.
Yeah,
every decision.
You probably think, at least I did. I thought I knew more than I did. In my 20s, of course, I thought I knew more than in my 20s than I know now. That makes sense.
Yeah. Okay, I think we've hit the hour, Trent. So I didn't want to keep you too long, but I honestly I wanted to touch on the land stuff because it is. I mean, you stirred the market. I will give you all the props in the world. And then obviously the market or the commodity stuff. It's been interesting because when I have Farmer Coach, I've got some U.S. guys there. And I didn't realize until the last couple of years the variance south and north of the border when it comes to marketing and agronomy. Like Canada on agronomy, we are considerably ahead because of the subsidy programs they have down there and the amount of summer follow and how they get paid not to grow a crop really well. And then on the marketing side, it's the total reversal because we had the wheat board for so many years. Like they are light years ahead of us on the marketing side. So it's interesting, right?
I noticed that when the internet came out, I used to go on these forums because I was more interested in marketing. I was kind of searching for crops to grow. And I was on these U.S. forums, and they were using terminology that I learned in university, but they really weren't applicable to us up here if you didn't grow canola. Right? Yeah. And they were just way ahead of us because I guess they had to be, I guess, maybe. So I think that's still, like you say, it's still obviously still there. So.
Oh, it's still there, and I mean, there's services like your own and everybody else that are involved in the marketing side that are making it better. But I would still say percentages of farms that know what a hedge account is or a put or an option is very minimum in Canada right now.
I agree with you. I think there's I was told 5% of the farms have a hedge account, and I wouldn't. And 5%, I don't know many guys who actively use it.
Nope.
I have one. But I think part of the problem is this. I think they're scared of margin calls.
Yeah.
And you shouldn't have a margin call. So there's one thing I'll add in here is the most important, and even in your cash sales, is to know where your stop is, your initial stop. Where am I getting out if I'm wrong? Identify that first, and then enter your position. But stick with that stop. When I
have a floor.
Have a floor. Like when it breaks below this level, okay, I am wrong. I'm getting out. Oh. But if you don't, and that's happened, you ride that thing down, then you get a phone call, send me some money.
Yeah.
And you don't want to do it again because you don't trade again because that was a painful experience.
Yeah. And I don't disagree with you. It's the PTSD thing, which we've said a lot, but it is. That phone call makes guys so scared that it's just they don't want to be part of it, and just not understanding, I guess, what a hedging, like most guys don't have the education. I mean, you go into agriculture or even commerce. I had a finance course, but it didn't teach me hedging and puts and options. I'll be front with it on that.
Yeah, I think there's just lack of education about it. Like we focus on what we're going to buy and when we're going to buy it, but I can assure you, to the listeners, that the most important thing is when you're getting out if you're wrong. So the best traders in the world, what's his name? Steve Cohen, owner of the Mets, legendary trader, Wall Street. His best traders are like maybe 60%, 56% success rate. But why they're successful is they keep their losses small. They get out when they're wrong. And they're wrong 40 to 50, 45% of the time. The best guys.
Well, and that's the funny part, because I've seen the S&P chart where 90%, if you'd just left your money in and not touched it, would have been the best return over the last X amount of years, right? But everybody has the emotional side, right? It's dropping. I need to get out and not having that floor, or else I'm going to ride it and come back, right?
Yeah, there's a few little things that can help reduce that emotion. That's what I really, when I do that market structure discussion, I usually highlight those emotions that are felt. Just bring awareness, but I wasn't aware of them. Then you start seeing this pattern, and we all feel them. We're not special, right? So when you get euphoric, maybe just be aware that you're euphoric, and that could be the top of it. It's going to be the top of the market.
Yeah, and we always say, go ahead, keep
complacent, just beware that you're complacent.
Well, and it's funny because we always say one bad year actually affects 3 years of farming, because you'll emotionally not sell, or you'll emotionally not buy, and you're just hurting yourself going forward because something that happened one time.
Yeah. Pain outweighs the pleasure, doesn't it?
Oh, for sure it does. Yeah. Okay. Anything you want to advertise before I let you out of here?
Well, I encourage everybody to check out my website at klarenbach.ca. And what I do, I love talking with people. I love talking to markets. Reach out with any questions you have. You just want to, you don't have to talk about markets. There's more interesting things in the world than markets, right? So, I got a couple newsletters, the Klarenbach Grain Report, Klarenbach Special Crops Report. I'm all over social media. I'm just going to start a podcast conversation series here, too, with people in and outside the industry. It'll be, I just like talking to them. Check my YouTube channel.
Good.
Give me a call for a visit.
Good. And anybody who hasn't checked out the Land blog, please go read it. In fact, especially now that we've talked about a lot of the stats, it caught everybody's attention, and I loved watching it. So again, like, share, comment, subscribe, and that's the Truth About Ag. Thanks for joining us. The Truth About Ag podcast is a proud member of the Heber Group, which includes Heber Grain Ventures, Maverick Ag, and Farmer Coach. We appreciate the support. Lastly, please like, comment, share, subscribe, and ring the bell. And if you have questions for a future podcast, please leave in the comments below. Thanks for listening.